Alright, welcome to another FX Street webinar. I'm Fan Yang, Chief Technical Strategist at FX Times, and I'm just going to drop my link there in the chat. Okay, so today I'm just going to take a look at some technical setups. I know the title is Breakout Strategy, Breakout Setups in the Forex Markets, but really, we'll start with a general technical assessment and then look at specific breakout opportunities if they present themselves. Okay. Alright, so I'm going to get right to it. I'm not going to waste any time. Start with the euro dollar. We do have a ECB meeting later this week on Thursday, so that's a risk event to look ahead to. Before that, we have, let's see, this is, let me go back to the 4-hour chart so we see the bearish trend we had in February so far. And just to backtrack even a little further, here's the daily chart. We broke down a trend line, a rising trend line that went back to July. So that was the key break, and we have a pretty sharp bearish trend developing in February. Since February. Here's a 4-hour chart. We are still bearish. We have a falling channel developing. You see the RSI, which is one way to identify a trend. Seeing that it is holding under 60 and being able to tag 30, that is a sign of a persistent bearish momentum. And now we're zooming into the 1-hour chart, where we don't have very strong bearish momentum. The RSI comes up above 70, below 30, almost above 60, so it doesn't have a very strong bearish momentum, but nonetheless, we have a bearish trend as defined by lower highs and lower lows, right? Okay, so coming up to this week now, we have a bounce here, 1.29 around 65. The point is we did crack 1.30, which it was a key psychological level. So we are bearish. The market is bearish. I think at least looking at this 1-hour chart, we need to break above 1.31, break above this 200-hour moving average, break above this falling trend line to consider the loss of bearish structure and bearish momentum. Well, momentum in this 1-hour chart is not that bearish, but at least the structure would be challenged if it pushes above 131. Otherwise, we are still bearish. We have a little bit of a counter trend action since last Friday, and we can look at it like this. We are sideways, slightly upside. Okay. And you see price action here overnight in the European session. I'm in New York right now, so when I say overnight, that's the European session, and we have we actually had a pretty strong decline right here, and this candle, is indicative of, sort of an early sign that hey, the bears are still in charge possibly. Okay, so as we enter in the U.S. session, we get a little pullback, but when you monitor this price action here, let me go into the 15-minute chart. You see, we have some sort of a pivot zone down here overnight that's been cracked, even though it's not been completely cleared. Okay, so we get a pullback. I'm anticipating some type of price action like this. Okay, to test this rising trend line, and if we do fall back below 1.30, we're likely to break back below this trend line, and it would be another signal of a bearish continuation. At least it puts the pressure down here at 1.2965 area. Okay, if it breaks the 1.2965 area, that's further confirmation. And we have to go back to the daily chart to look at our next target, so let's do that. So we see that the 50% here is at 1.2875 to the downside, which is coincident with a couple of support pivots here in November and December 2012. You also see a confluence of Fibonacci retracement. So here it's 50%, right? If you just take the November to February swing, you see 78.6% here at 1.2885. So it's 1.2875, 1.2885 could be the next target once the market resumes the downtrend. That's if it does resume the downtrend. And if it holds under 131, that to me is the primary outlook right now. Above 1.31, we can start looking at a more sideways market, but for now, it's still very bearish, especially in the 4-hour chart. Right. So in the 4-hour chart, a signal that the market is not bearish anymore would be if the RSI pushes back above 60, because it has held below 60 during this downtrend. Alright, so that's the euro dollar. I'm going to move on to the next one. Hey there, John. Welcome to the room here. Alright, let's talk about the Aussie dollar. It is a interesting pair. Let's start. This is a 15-minute chart. And I'm looking at, I've been trading this trend line. Well, I traded this trend line this morning. Let's see if it does hold. But let's go back to look at what this trend line, where this trend line is coming from. Okay. Okay, so let's even go back further than that. 4-hour chart. Okay, here we go. 4-hour chart shows that in much of 2013 so far, since the mid-January, since 1.06. The market held under 1.06. Aussie has been falling, and you see in this 4-hour chart, sort of like the euro dollar, but more developed, more mature in this Aussie dollar is the bearish momentum. Again, you see the RSI starting to hold under 60 and tagging 30. Okay, so that's one of Andrew Cardwell. He's like an RSI guru. That's one of his way or methodology of using the RSI, and I like that methodology as well. You can usually identify trends like that. At least you identify that this trend has been persistent as far as momentum goes. Okay. So once again, the RSI is up here at 60. So we're at the point where if it breaks above 60, we lose that bearish momentum. Okay. And if the market price also breaks above this falling channel, I would say the Aussie dollar would be more neutralized. Okay. So for now, it's still bearish, but we're at sort of the cusp of challenging that bearish outlook. So that's why I took the trade here, because if I'm wrong, I'll be wrong. I'll know that very soon. If I'm right, the focus is back down here. The first sort of near-term target would be 1.0180 or 80, maybe up to 85. That means that if the market gets near that area and hasn't broken it, you don't know if it's going to break. It's sort of a key support here. You might want to put in break even, or in this case, if you look closely, there's some pivots you might be able to go off of in terms of trade management. This here, right? This pivot here. So maybe put it above that pivot. So if you entered here and you put your okay, so the trade management plan is as such. You got in here at this. You put your stop above 1.0260. Maybe give it some elbow space, right? And if the market does develop this downtrend, at least in the near term, and gets close to this 1.0180-85 area, you don't know if it could continue. This sharp rally here could be a sign of, a consolidation or something like this, right? So at that point, maybe you're 50-50 and you want to get in sort of a break even, or at least if you actually put it down here, 1.0225 area, you could lock in maybe 10-15 pips in case the market goes against you, like that. If not, it keeps going, hey, you get you get another chance to continue to ride the trend lower and continue your trade management there. Okay. So this isn't a breakout trade at all, but I am a breakout trader, but once in a while I do take these trades if it's along the if it's in the direction of the trend, which has been bearish. And but the thing is, I don't take that big of a position. Okay, so that's the Aussie dollar. Let me see, John, my long-term prediction for Aussie dollar. I don't really have a strong long-term prediction. It's kind of I'm waiting for it to break out. Now, as far as actually, that's a good question, because as far as a breakout goes, I was looking for the breakout of 1.0150 to give me more bearish clues, and it hasn't done that. Okay, you see in the daily chart, this little doji candle, or is a hammer, right? Or is it hangman? I'm not. The terminology escapes me right now, but it's either hangman or hammer, one of those. And the point is, today's price action, the fifth candlestick, looks like a reversal candle. Okay, so if you're playing the higher time frame, if but the thing is, you got to give it a lot of elbow space if you're trying to go long on this. That's why I'd rather wait until if I go long, I'd rather wait until this channel breaks, and then I'll plan the bullish action. That would be against the previous trend. So I'm not, I don't really like that trade. But if it happens, gotta plan for it. But for now, in the very short term, it is bearish, and it hasn't really shown us reversal except for this little candle here, this rejection here. I mean, we know that there are some support here, so this this was kind of anticipated. It did go lower, took out some of the stops here. Okay, the point is, this isn't a very good break to the downside, so I don't have that bearish outlook just yet. If it can close one of the daily candles under 1.0150, I would be more inclined to look for a bearish outlook. Down to the next key level around 0.97, 20 area as the next target. Okay. All right. So because it broke the October low doesn't mean it is bearish. October, you mean, John? I guess you're talking about this low here. I mean, that's the low I've been talking about. October low, yes. So it cracked it, but it's not that clear that it's bearish to me because of the reaction so far. So I need more confirmation. Okay, moving on to the pound dollar. All right, so pound dollar for me, kind of, this breakout is one of those trades I would take. Breakout trade. Looking for at least a breakout target. Okay, but this is one of those cases where I would be wrong, and I was wrong, and I did take a little hit here as the market consolidated and came back into the previous range. Now, I was planning for another trade if the market here held under 1.5150 and pushed lower. Okay, and in the 15-minute chart, you could see that there was a attempt here to break lower, but that again was a false break. So there's a false break in the higher degree, and then there's a false break in this lower intra-session degree, and they all broke to the upside. And now we broke above what I call the central pivot of our previous range. So back to the 1 hour chart, you see this range here between 1.5072, 1.5218. Now the middle range is around 1.5150 down to 1.5140. So the fact that this rally broke above it, to me, invalidates this previous breakout, and it's back to sort of the drawing board. Back to neutral, I would say. It's not as bearish as it was before. And when you look at this 1 hour chart, you see the RSI, right? Hold under 60, hold under 60, tag 30, hold under 60, tag 30. Oh, a little more break, but it still held under 70 at least and came back to 30. Now it broke above 70, so there seems to be some bullish momentum developing here. Although looking at this bear trend, it's still far from bullish. It's sort of neutralizing, turning the downtrend to more sideways market. But that could be a precursor to developing a bottom. Could be a rounded bottom, and if that does develop, then we could turn back to bullish outlook for the pound dollar. Okay, that's looking at 1 hour price action. If you look at a higher time frame, the daily time frame, even the weekly time frame actually. So before I do that, let me okay. Carlos. Okay, so before I answer your questions, let me just take a quick look at this. We had these lows here, very key lows here. Break. Okay, so in the long term, I think this does open up 1.4785 and even the 2010 low. If you draw a trend line from these two, you see that it has broken that as well. So, these past few weeks of very bearish action, even though we could be in a bit of a short-term pullback, that pullback shouldn't be seen as a bullish market. It should be seen as a pullback, a reversion back to the mean. Maybe, come back up to 5320, maybe a little higher. You could take this swing and look at a 50%. Okay, could maybe come back to these levels, retest the broken trend line from the weekly chart. Now, those things can happen if this bottom does develop. But in the longer term, I still think the pound dollar has opened up lower targets. Okay, so short term, neutral with a chance of turning bullish. Longer term, still bearish, looking to fade after a short term pullback. Okay, winning percentage on breakout trades, number of trades in a particular month. Okay, so breakout trades, to be honest, they're very low in percentage. You gotta keep at it, because the point of breakout trades is to catch the trend, right? So you're gonna have a lot of these false breakouts, but once you catch the long trend, that would make it up for you. Okay, so that's the profile. I'm guessing that's what you want to know, the profiles or parameter of this type of trading system. It's relatively low percentage as far if you're looking for 60%, 70% winning, that's not breakout trades. Breakout trades are lower, closer to 50%, sometimes even lower than that, and you just have to make sure, but it does help you catch trends when they do develop. Okay, and it also depends on your trade management, because the percentage of wins really depends on when you put your break even in. When do you start? Put your stop to break even. When do you put your stop to at least capture 10-15 pips? Okay. Fundamental news. I make sure I'm aware of the risk events, when we had Aussie Dollar yesterday, we had the RBA. They held rates, so not that dovish. But the thing is, it's hard to. I don't try to anticipate the reaction unless it's a very shocking one, unless it's a shocking fundamental event. Like if they had a rate cut, I would be very bearish on the Aussie dollar. They didn't have a rate cut. I wasn't very bearish. I waited for the market to test this channel resistance. Okay. How do you know if a pullback is not a reversal? You don't. I guess that question was off of the pound dollar, right? Like if we pull back here, how do I know this is not a reversal? I don't. I mean, it could go all the way back up here. That's possible. But to me, there is more that the edge has been turned downwards. It's bearish. The market's bearish. So a rally for me is going to be a correction until it shows a very strong, at least I would say at least a 61.8% retracement. Okay. So, but honestly, you don't know if this rally is going to be part of further bearish continuation, or if it's actually going to come all the way back up and maybe even clear these highs. For me, I don't really need to know that. I don't need to know that to trade. I don't need to know predict where the market is going. The saying, trade the chart, trade what you see, and be agile. Just be agile, but agile in a way that's planned, not like you just trade on emotions or anything like that. Agile in that, hey, you have pre-planned. This is what you do when the price action does this, so that you maintain your trade management, maintain your equity and risk management. Okay. So I could have rephrased the question to the percentage of breakout trades that came to fruition, taking a sample of them on not winning ratio. I don't have that exact number for you, Carlos. I encourage you to examine that yourself. But I would say, relative to say range trading, breakout trading has a smaller fruition winning percentage, but it does have a larger potential reward. Okay. Alright, so let's move on to another currency pair here. Here's the US dollar, Japanese yen. And in the 1 hour chart, you see sort of a sideways market, right? The RSI 3070, 3070. There's no clear direction of a trend, no clear momentum. Moving average is whipping back and forth. Price also whipping back and forth, the moving averages. So very unclear here what the trend is in the 1 hour chart. So let's go to the 4 hour chart. 4 hour chart, you also see the market sideways here, but you do see a bullish stance in that the prevailing trend is bullish. And in the 4 hour chart, the price did stay above the 200 moving average. And last week throughout the last few weeks, I've been looking at the 92 level as a guide. If the market can hold below 92, this looks like it would top off. But you see this sort of congestion pattern around 92. The market didn't know if it wanted to stay below or above, and eventually decided to stay above. So the threat here of topping is sort of cleared, and the market remains sideways / bullish. Okay. And other Japanese yen crosses are more fun. Yeah, it's been dollar yen has been sideways throughout February. But to me, there is still pressure on the 95 level. In the near term, we need to clear below this 92.75 pivot before putting the pressure back on the 92, 91.70 area down here, and also a rising trend line going back to November here, November 2012. Actually, let me make that more clear. Okay. Oh. Okay, so we still have not topped, and the pressure is still upside, but the choppiness suggests there is a good chance. For me, it's 50-50 either way. There's a good chance to break below, and if it does below, then I would start looking at this as a bearish market. This level here, 87.78 to 88 area, could be our next target after the break. Okay. So why don't we take a look at some other yen crosses? Okay, John, I suggest people go to my site, www.fxtimes.com. I usually write my analysis in a way that explains why I make those assessments. For example, pound yen here, it broke above 141, broke above this falling trend line, and to me that kind of neutralizes the February trend, which was bearish. Okay, if you look at the daily chart, you see that this swing here in February was pretty strong. It broke below the previous consolidation area. So this is a very strong trend and a rally so far. Now, so back to that question about whether how do I consider something reversal? How do I consider something a pullback? If this bearish trend failed to break below these pivots here, and instead it went like this and up like this, this rally relative to that previous decline for me would be a reversal, because it would be a reversal back into the prevailing trend that has not been that remains intact. But in this case, this trend was pretty strong, broke below this previous low here. It showed strength. The RSI broke below 40, shows you some loss of bullish momentum. Now this rally here, I'm not so sure this could be a reversal back into the trend. And before considering this to be a reversal back to the trend, I'm going to consider it as a pullback against the February dip. Okay, so that's one way for me. For me, both of them sort of exist as possibilities, but one always has a more a higher probability than the other. Okay, it's never 100% clear, but you do have sort of an edge for one versus the other. Okay. Okay, so I'll get back to euro dollar in a little bit. I just want to finish this pound yen here. So pound yen for me is at the crossroad. It's breaking above this trend line. We could go to the next Fibonacci retracement level, 142.85, which is also a support resistance pivot. Okay. Now before that, you look at the RSI in the 4-hour chart. It's at 60. Now if it holds at 60 and comes back down and price breaks below some of these lows here, let's go to the 1-hour chart and start looking at this price action like this. Okay. I think if it starts to push back below 140, pushes back below at least this 1-hour, 200-hour moving average, which is at 140.60. If we push back there, then I would say we would revive the bearish continuation outlook. Okay, but at the moment, we actually have this high here being tested at about 140.150, and a break above that, we could open up this 50% retracement level there. Okay. Let's look at this as a sort of possible corrective channel back up to 50%. Once we cross back above 140, 150. Okay. All right. Let's see what else. Okay, here we go. This is another trade I took. Oh, I should have been looking at this to manage it, but okay. So this is a combination of a couple of trading methods. Right. One is what's called a Gartley. Okay. So what you have is a rally here, a bullish swing. You have a swing low. You have a sort of a A, B, C, D kind of move here. Those type of moves are called harmonic retracements, which break down into different types. There's Gartley, butterfly, bat, crab. The point is, this is an ABC. Came back down to 61.8% retracement, and then in this 15-minute chart overnight, in the during the March 5th session so far, well, until the U.S. session, we had sideways action. Okay, we had this resistance here around 1.0270, support here around 1.0255, narrow range. Okay, so at the completion of a harmonic pattern, the market went sideways, and a breakout to the upside, therefore, to me, signals bullish continuation. We have a first challenge here with this falling trend line, which it is breaking. It is clearing. The RSI is coming back up above 70 in this 15-minute chart. So it's a good sign for me that there could be a bullish continuation. Now, it's important for Gartley, when you look at harmonic patterns, it's important to look at the prevailing trend as well. So when we backtrack to the 1-hour chart, we do see that the prevailing trend has been bullish, and that gives me more confidence of playing the breakout to the upside. If there's a break to the downside, I might still play it, but with I'll be very light-footed, and I'll have tight trade management, meaning I'll push my stop to break even very, very fast. Okay, because it is against the prevailing trend. Okay, so here with this trend line break, I think the next targets could be up here, 1.0305, a little bit above 1.03 to 1.0308 area. This could be the next near-term target for the rest of the session. And more aggressively would be the high here, 1.0340. So this is one of those breakout trades, combined with the idea that a Gartley has completed and the breakout is in the direction of the prevailing trend. So alright, so that's that. Okay. Euro yen. So Carlos, I'm going to go back to the euro dollar later, but I just want to make sure we got everybody who wanted to take a look at their charts, and make sure I get a variety of charts looked at. Okay, so euro yen 1-hour chart, we see a possible breakout here. Okay, for me, this breakout continues a sort of a corrective wave back up. Okay, and it's developing here. It's breaking out. So let me go to the 15-minute chart and look at the situation here. Yeah, this is a good breakout. In fact, if you look at this 15-minute chart here, you had a little bit of congestion, and now there's a breakout. Okay, so this is a good breakout. I think the pressure now is back onto this origin of this projected channel here at 122.16. Okay, so in the near term, that could be the next target for the euro yen. Okay, so that's the intra-session look. Let's go back to look at the situation. The situation here is still in the 4-hour chart. Since February, we lost the bearish momentum. we lost the bullish momentum. When you look back here, okay, since I guess November here, well, even before that we had a bullish trend, but we had some consolidation here, then the market came back up, and you see the RSI mostly hold above 40. There were some violations here that are exceptions, but for the most part you see the RSI hold above 60, right, and be able to push back above 70 in this 4-hour chart. Now in February that pattern has broken and sort of flipped. Okay, voice problem. Hey, mic 1212. Can you guys hear me, or is that just Deepak? Okay, Deepak, I guess you gotta adjust your headset a little bit. Yeah, audio seems fine. Now, as I was saying, this already flipped. So in the 4-hour chart, this looks like a bearish trend has been developing. At least there's been persistent bearish momentum, and that has been accompanied by this little descending triangle and then a break. This break was key because it broke a rising trend line that went back all the way to November here. Okay, but in the daily chart, you see the RSI still holding above 40. So you see, when you look at different time frames, you see that there are different momentum developing. So for me, Euro Yen is really at the crossroad. In the 4-hour chart, it looks like there's bearish momentum. In the daily chart, it looks like there's bullish momentum. And then when you go back to the 1-hour chart, it looks like it's trying to develop bullish momentum. Okay. So now this 1-hour candle, you have to make a judgment. This type of channel, for example, this little channel here, for me is one that you should look at from a 1-hour perspective, 1-hour chart perspective, okay? Because it is one that tests, the 1-hour 200 moving average, and if this candle breaks, it needs to break in the 1-hour chart for me. So there's still about 23 minutes in this hour. We'll see if the market has enough reaction here to push it back lower, or if the breakout will indeed develop. Right now, it's not clear at the moment. Okay, so let's wait before we jump on to this breakout and call it a breakout. Now, RSI here held above 40, but hasn't been able to push above 70, so not a very good sign of bullish momentum. Just sort of floating up, not really a lot of fuel. But in order to get back to the bearish side, so we talked about some bullish possibilities. I would rather see the bearish break. For me, that would follow into the February trend, and for me that's a better time frame for me. Break back into the February trend. If it breaks to the upside, if I want to follow the daily trend, okay, I want to see this falling trend line break. Otherwise, it's still at the crossroad. I don't know what's going to happen. I mean, even if it breaks, I'm not going to be completely sure, but at least it breaks a key level, and I would have more confidence that the market's resuming to the upside with 127.72 as a first target. Okay, but since February we have a break. I'd rather see it break to the downside. Okay, I'm not saying I'm going to trade and hope that happens. No, I'm waiting for it to break. If it does break to the downside, break this trend line, and in the 1-hour chart, I want to see the RSI push back below 40 at least. Okay, and maybe even tag 30. If it tags 30, then that's a good sign for me that there is bearish momentum. Okay, let's see. Let's see if we could set up some very intra-session. Now we see this. There we go. Sometimes it doesn't let you click on the line. Okay, there you go. See this here? This seems to be a support pivot, intra-session support pivot. So if that breaks, that could be an early sign to the downside. You might not have to wait for this rising trend line, but you want to wait for this rising trend line before adding more positions. Meaning, if you think that if you're going to take an early signal like this, a break below, what is this, 120, 113, 120, a break below 120, 110. If you're going to take that as a bearish continuation signal, I would say, use a small position and build position after further confirmation. Like if you go up like this and then you see reaction, maybe build more positions at that point. Okay. I'm kind of just talking as I analyze the market for myself too. This is part of my trade planning as well. So, sometimes it sounds like I'm just talking off the fly here, and that's true. Some of these charts that I haven't looked at until now this morning. So, all right. Let me know what other charts you guys want to look at. Actually, I do want to look at the Euro Swiss. I like this chart here. So I'll do the Euro Swizzy and then I'll open it up for you guys to ask me any questions, okay? For the Euro Swizzy, it's a very interesting pair. I mean, it's been quietly trading above the the Euro Swiss floor, the SMB floor of 1.20, right? Look at the daily chart. And there's pretty much no volatility here, and then there's a strong break here. I remember way back in 2002, I noted, I mentioned this break, and I was looking at this decline, and if it stayed above the 200-day moving average, that's gonna mean that we probably have a bottom here. Okay, so basically we have a long line, a break to the upside, and then coming back and respecting this line. We saw that in the dollar yen. I'll show you the dollar yen again in a second. But the fact that we have a pop and then slingshot, this is what I call a slingshot. You break above the 200 moving average, come back, test it, and stay above. That's a slingshot. That's a good bullish sign. But I mean, I would never have predicted this pop here. I would say, there's pressure back to these levels up here, 1.2180. But then, hey, sometimes luck plays into it, right? Never underestimate the power of Lady Luck, and always be good to her. Don't bash her. Don't curse her out when things don't go your way, because then you might not be prepared when the next time she gives you a good opportunity. So the saying is you always want to have preparation, and that's the best way to have to capitalize when you do have luck. But you don't depend on luck, but you have to at least be prepared for luck, right? And this, I would say, would be a lucky pop. I would never have guessed that, or never have anticipated this type of pop. Okay, and this was a type of pop that you don't really, your trade management would have been very simple until maybe here, where there was a nice little pullback, daily pullback. Okay, so anyway, after this pop now, we come back down, and now we're testing this consolidation. Okay, so you could see that is this market making steps? One step, two step. Hey, I would as far as like anticipating fractal and anticipating an analogy of the market price action, I would say it's possible that we're going to get some kind of sideways action on top of this consolidation. And then if it breaks to the upside, that would be another bullish continuation idea. Okay, so that's the daily chart, looking at it from the daily perspective. Now, going back to the 4-hour chart now. it looks a lot different, right? It's like another world in the 4-hour chart and the 1-hour chart. But you should, if it breaks to the upside here, you're prepared to go bullish continuation, because you know that the Euro Swizzy has been making steps upwards since August of 2012. But if it doesn't break to the upside, you have a channel here holding this market bearish. You have the RSI holding mostly below 60 and tagging 30. So with that combination, and if the price action falls below 122.37, this pivot here, it's going to at least already clear the rising counter trend channel here. And then this would, for me, revive some bearish outlook in the short term. My first area of trade management where I want to make it break even would be around here. And if it does break lower, then the pressure is back to the 1.2120 area. Okay, but for me, the fact that we have consolidation here, I'm not going to be that aggressive. Now, back to 1.2120 is, for me, already an aggressive target, because of the fact that in the daily chart, this was a doji candle with a long tail to the downside, which reflects strong support here. So even in the 121.60 area, I want to make sure that I trail this trend. If it develops, I want to trail that trend, just in case there's some good support here, still good support here to push the market. And that, for me, that's my theory right now, that the market is going to go back into sideways action. I don't like to predict, but when there are good analogies like this, I at least have some a little bit of a forecast going on there, right? Okay, so that's. I said I wanted to show you also the same type of analogy in the dollar yen. So let me just jump to that. In the daily chart, okay, we came to record lows here in 2011, by the end of 2011, and we had sideways action. Then we had a break to the upside. Now you see, the break here pushed the RSI above 70. We had it before like that too, but the market came back down. And here again, the market came back down. So as far as the prevailing trend is concerned, lower highs. This was, at this point, the market looked like, hey, there could be bearish continuation, right? But we saw the market here hold. And it doesn't have to hold above the top of this previous consolidation. For me, holding above the middle of a previous consolidation zone is a good sign that it's respecting that zone. Okay, for this, there was a bit of a violation, but for the most part, this consolidation stayed above the middle of the previous consolidation and made another step up. Okay. And the dollar yen, in this perspective, is very bullish, although in the short term, it might be a bit overstretched. We already had a bearish divergence here that's resolved. It's already resolved because the RSI has come back down to 50. It's not overbought anymore in the daily chart. So yeah, be careful. There's still some bullish pressure, and I would say don't be short on dollar yen until it clearly stays under 92. Okay, so that is that. I can take a quick look at euro dollar, and we see that the euro dollar is making an attempt down to test this trend line. So like we've been anticipating, we've been planning, if it breaks below 1.30, and we like the break. It's a strong break. It's not one of those breaks with a very long tail to end the hour. If it does that, then the pressure's back to the 1.2965, and when looking at the daily chart, to answer your question, Carlos, will it get to 1.2875? I believe it can. I think that is the next target in this. Even before ECB, I think the market can get to that level. Okay, but I think, see, before the ECB, this is what always happens, right? You think, oh, there's a key risk event on Thursday. The market probably will get into consolidation, non-direction. But how many times have you observed that the market starts a move even before the risk event, sort of in anticipation of what that risk event will provide? So in that scenario, I'm not saying it will happen. In that scenario, if the market finds, if there are some very bearish headlines, Italian election, I don't know, that's an impasse right now that might take a couple months before they figure out. Anytime there's like a downgrade rumor, it seems to have some effects, especially if it's true. But I don't like rumors, but hey, that could push it lower. The momentum is still bearish. The trend is still bearish. So, those things can continue the trend. Again, until we break above 1.31, I'm staying bearish on this pair. Above 1.31, then I look at it as a scenario of the market sort of going sideways and being indecisive until further clues from the ECB. Okay. The key. Okay, so NMBR. Good question. I probably should have led off the webinar with that, right? The main, I talked about the RSI quite a lot, so that's an important indicator for me. I have the moving averages, 200 moving average, 100, 55, 22, 8. It's not really important what the exact numbers of those moving averages are. I just wanted to make sure I get very near term, short term, medium term, and the 200 moving average. I wanted to get that because you could spot the trend, you could visualize the trend. They help me visualize things, not necessarily give you trading signals, but it helps you visualize where that trend is. Like in this 1 hour chart, you see the trend is choppy because these moving averages, lower moving averages, are kind of chopping each other, but the market maintains under the 200 moving average. So to me, that's a bearish trend, although kind of choppy. And you could tell by the RSI as well, that because it goes above 70, 30, 70, 30. So those are some indications of a choppy trend. I have this Bollinger Band, 200. It's based on the 200 moving average, 3 standard deviations from the 200 moving average. So when the market hits this Bollinger Band and gives you sort of a bullish divergence, so let's say in this case, a bullish divergence means you see the price action push lower below the Bollinger Band, but the second time it didn't really push that much lower. That is a bullish divergence relative to the Bollinger Band. There's actually an indicator for that. There's a Bollinger, I forget what percent Bollinger Band or Bollinger Band bandwidth. I think percent Bollinger Band. No, it would tell you. It would map the distance of your price action to the Bollinger Band in an oscillator like the RSI, and you would see a bullish divergence there. Okay, like that. But this is the RSI. So now you have the RSI bullish divergence and the Bollinger Band bullish divergence, and that shows you, hey, maybe the market will take a breather here. Sometimes it'll take a little bit of a pullback. Okay, but you see in this case, it was an expanding consolidation until a pullback swing. Very difficult to catch. Okay, so it's very difficult because it's going against the trend. But if you caught it, that's great. There was an extended divergence. You might have gotten cut a couple times before you got onto this trade, and maybe you did end up, with a positive gain. But this one would have been, to me, just nerve-wracking the whole time through. Okay, here's another one. Bullish Divergence with the RSI as well as with the Bollinger Band, because here we tagged the Bollinger Band, but here we missed it. So the distance to the Bollinger Band here was closer than this, even though price level was lower. You guys see that, right? That understand that concept of the bullish divergence? Now this is bullish divergence with relative distance to the Bollinger Band. Lower price action, but higher relative to the Bollinger Band. So bullish divergence, again, this is another one of those pullbacks that develop from that scenario. Now on the flip side, the fact that it was able to do that is actually a sign of bullish good bullish momentum. There's good volatility to the downside. Here, we sort of lost that. We don't have that. The Bollinger Band appears to be tightening now. So there's a little bit of lost momentum, lost volatility to the downside. Okay. So those are the indicators I use, but the main one is price action. You look at price action, price structure, and you use these other indicators to help visualize the market, tell you when the market could be overbought or oversold, and make your decisions from those guides. Alright, it is pretty much at the end of the hour, so I'm going to wrap up. It's been a pleasure to share my analysis. This actually was part of my trade planning as well. Had a busy morning, so I didn't get a chance, so this was good to share with you guys the way I look at the markets. And I hope you guys join me and come holler at me at FX Times. And also, if you're ever on Skype, I'm always on Skype, and we can always have good discussions of the markets. My Skype ID is fan.yang.cmt. I didn't really introduce myself that much here in the site, but I hope you guys, I encourage you guys to reach out to me, and we'll talk about the markets, talk about our trading styles and whatnot. And there's actually a lot of people here. John, Paul, Chuck. We've been chatting a lot on Skype as well. So and Berna. So I'm glad we have you guys here, keeping me company, and I hope we have more members in our Skype room as well. Okay, that's it for today. I do have another webinar later on in the month, March 27, so a few more weeks. Before that, again, come visit me at fxtimes.com. Thank you guys. Thanks to FX Street for putting together these webinars. You get to see a lot of different point of views and different methodology, so that's a very good benefit for you to learn. Okay, so that's it for now. I'll talk to you guys in Skype, and see you guys next time.